radio personality and tax advisor, Mr. Ev James. Good morning, my friend.
Good morning, Mr. Brown. How is my reception?
Very good.
Very good.
Okay, excellent. Yes, good morning, listening audience. This is Everett James, your trustee tax reporter. Actually, broadcasting to you from the West Coast, where it is currently 10 a.m. on Wednesday, right here for your, and not only your pleasure, but also your educational benefit. We come on every Wednesday, 1 p.m. On the East Coast, and as I mentioned, 10 a.m. On the West Coast. Okay, folks. First off, I want to just remind you of our ongoing support that the station is providing to a local baseball team called the Riverside United Baseball Club. They've been in existence since 2023 under the leadership and full funding of a set of parents by the name of Jason and Cicely Wooten, Wooten, out here in Riverside, California, and they are looking for your assistance. Their phone number, 951-534-3838. Easy number to remember, 951-534-3838. And they are doing this because they've been shouldering the cost of this traveling baseball team. The team has become so proficient, but unfortunately, all of their most of their families are not high-income folks, and looking for assistance, either financially or in kind. And look at it. Please give them a call. They have done so well that they've been invited at least more than once to tournaments out of the state, and currently just finishing a tournament in Arizona. They were looking for your help for these 9 and 10-year-olds. They're better in skill, and because they're not a traditional funded team, like many teams that are funded by their parents, it usually runs an average of $150 to $400 a month. So instead of letting their talents just go to waste, we're choosing to give them the opportunity to experience competitive baseball by expanding their funding resource base. So please give them a call, and I'll try to remember to mention the number again before the end of this program. Okay, what we'll be doing this morning is hitting a number of areas. First off, of course, there's funding for ICE remains stalled, but fortunately for ICE, they do have plenty of funding already, and that was due to the passage last year of the president's One Big Beautiful Bill. That legislation really that included about $75 billion for ICE. Usually, the ICE would get at least $10 billion annually, but because they've already gotten their money, for really a good deal of time, they're not. The Republican lawmakers really are not in any big hurry to face, the funding realignment and the funding renewal because they've already gotten their money. So in any case, we'll keep you up to date on that particular matter, and and we try to be somewhat resourceful on this program. And so we invite your comments and your questions. please send them to either by phone or by email. By phone, Everett James at 951-522-9877. That's 951-522-9877. And by email, evjtax1 at gmail.com. That's evjtax1 at gmail.com. Let's take a look at the current situation. We're going to take a look at some tax relief subjects, such as the firms. Are they worth the money? What is tax relief? How to get tax relief? That certainly would include the IRS repayment plan, which is also known as the installment plan, offer and a compromise, penalty abatement, and what are maybe some of the advantages of tax relief companies. To begin with, our tax relief firms, are they really worth the money? Is it really worth going to a tax relief company? Well, the short answer is yes. Individuals will often find it's a lot easier to work with a company if they have tax relief issues to deal with. Now, the tax relief team will guide clients through the complicated tax relief process, including programs like the IRS Fresh Start program, tax relief. Just about all tax relief companies do have a team of licensed experts who have an in-depth understanding of just how IRS works. If you're uncertain whether you need help from a tax relief company, many of them will offer a free initial consultation to assess your situation. Now, during this consultation, they can point out which services you're eligible for, such as a Fresh Start program, and they'll even do an analysis, a financial analysis. If you qualify for their service and choose to work with them, well, they'll guide you from start to end for a certain fee. The essential part, just to help you screen out those you may not be desiring to work with, be sure that they give you a definite cost figure before you get started. So the essential part is finding a tax relief company that fits your needs. You want to enlist the services of a trusted company and really do avoid dodgy firms that pop up as the season arrives and disappears from the season as the season ends. You want those firms to be around all year round so you can contact them as the need arises. So there are a lot of relief firms that exist and say they can do the work for you, but there's certain companies that make all of these extravagant promises and then just ask you to pay for services up front. Wow. So how do you find the best tax relief companies? Well, if you have a pen or a pencil, please take down some of these guidelines. Accept a company, but one that recognizes that there's no 100% guarantee of resolving all of your tax issues. You can usually rely on companies that do have a team of licensed professionals. It's always good to find a company that has a team operation as opposed to a single or maybe even just a two people partnership. You get an organization that has a full staff. You want there should be free consultation. There should be online customer reviews. What about is there some ways that we can watch out for tap scams, scammers in the business? Well, what are some of those signs that you're just dealing with a scammer company? Well, number one, failing to evaluate your team and financial background. Yeah, it just the failing to perform that particular exercise. Promising that they can get rid of the taxes that you owe. You know, in the tax field, if you have a debt, there's no one on this earth, at least, who can really make a promise like that to get eliminating or all of your the taxes that you owe. Trying to stall the case by just keep repeating the same requests or keep asking for the same forms. If you ever bumped into organizations that do that, not being transparent about the fees that they charge. So they should be, after a reasonable evaluation, they should be able to, to give you a upfront amount of what the charge is going to be. Okay, so what is tax relief? Well, a lot of people feel their confidence just declining, or once they face the complex and grueling process of dealing with taxes. And of course, that's perfectly reasonable. There is a reason that professionals such as enrolled agents and CPAs and Fresh Start programs exist. They understand they can stay on top of the rules that apply to your jurisdictions, so you don't have to deal with all the stress. 21% of Americans owe, believe it or not, some amount to the IRS based on data released by the government accounting office. And I would just guesstimate at this point that that percentage of people who owe money to the IRS, I wouldn't be surprised if it's jumped all the way up to 25%, a quarter of the tax-paying, public. There are taxes that were not paid on the year that they were due, whether in part or in full. Although tax relief does not magically eliminate the tax money that you owe, these types of services and programs, they at least can help lessen the burden by settling for a lower amount. There are different types of tax relief, including tax deductions, tax credits, and tax forgiveness. In essence, tax relief consists of IRS programs that were designed to reduce one's tax bill, such as the Fresh Start program. If you're in a bind because of your taxes, there are certain ways to obtain that relief. And, here are some of the most popular methods to consider, including the IRS Fresh Start program. Fresh Start is one of the most well-known initiatives to help taxpayers struggling with their tax debts. The program does make it easier to qualify for installment agreements and offers a compromise. It helps to reduce your tax burdens and helps you to avoid aggressive collection actions like wage garnishments and levies. You do want to stay away from those. Those are truly devastating, not only to your budget, but also to your self-esteem. If you have unpaid tax debt, the IRS Fresh Start initiatives may allow you to settle for less or get on a management repayment plan. The repayment plan will allow you to split the total amount owed into manageable payments and avoid garnishments and levies. There's still going to be penalties and interest for late payments until the balance is completely paid. The payment plan can be short or long term. Short term relief spans up to 120 days, while the long term plans go over 120 days, so it's over 4 months. Short term payment plans allow $100,000 maximum in combined taxes, interest, and penalties. Long term plans have fees, and the maximum on the long term plan is $50,000. And that includes taxes, interest, and penalties. How about offering compromise, which you've undoubtedly heard about in the past? That is a negotiation, basically, between the IRS and an individual who struggles to pay their tax liability in full or will experience financial hardship in doing so. Now, this is a legitimate method to settle tax delinquencies for a reduced amount, but the offering compromise is distinguished by the fact that you start off and you hopefully wind up in actually paying less than what you originally owed. And so there are things that IRS does consider, such as your income, your ability to pay, and what is your asset, your total amount of assets. You have to make the required minimum tax payments and estimated payments. Plus, you have to pay an application to ensure that you're actually eligible. You will also you'll be asked to complete a Form 433A for individuals, Form 43B for businesses, and a Form 656. Again, those forms that you'll be asked to complete, and you look these up even before you get started. Form 433A, for individuals, Form 433B for businesses, and a Form 656. In addition to, you would expect documents that you might know or be able to project, as required. They do have, Fresh Start does have guidelines that can help determine if you're going to actually qualify for the offer and compromise. Now, if you wind up, folks, having a tax bill that you really cannot afford in any way, shape, or form, you need to also consider interest and penalty charges that are accumulated. Fresh Start programs may help eligible taxpayers to reduce or eliminate these penalties. Penalty abatement is a type of particular relief for folks who experience special situations that make it difficult for them and hinder their ability to pay the taxes in the first place. These situations can include hospitalizations, natural disasters, a serious illness. Certainly, if you're on an ICU, that's a serious illness, or other similar situations that just put the situation way beyond your control. And this is identified as a reasonable cause penalty abatement. The first-time penalty abatement is the most commonly available type of waiver that's allowed by IRS. So if you have But if you have a good history of filing and paying taxes on time, and you do not have a record of penalties, you may be qualified for the first time penalty abatement, where the IRS actually waives the penalty. I would say this is one of the first things you should check into. What are some of the advantages of tax relief companies? Well, American taxpayers will agree that facing the IRS is quite an intimidating thought, and certainly for most people, that's going to be the last thing they want to happen. The complicated regulations for filing taxes, things you have to face every year, and the tax jargon that makes the process really overwhelming for most people. Establishing a tax relief service makes the process simpler and allows it to be understandable for the layman. There are advantages that you can take from having an expert. An expert can help you prevent tax liens and levies by looking into the specifics of your IRS Fresh Start case. IRS uses asset seizure and wage garnishment to collect the majority of the taxes that are owed. Again, what are those methodologies that they use? Asset seizure? That doesn't sound very good. You know what that might be? And garnishing your wages, which is a horrible a come down and reduction in your standard of living. You can avoid those punishments if you're aware of some of the options. Tax relief firms can help you look for an alternative method to help pay back your taxes, such as what's under the Fresh Start program. They employ tax professionals, help you understand the laws, and can really explain the process in a manner that's easy to understand. The tax relief company can also serve as a tax representative to actually negotiate with the IRS on your behalf. In addition to helping you manage your current tax issues, they can help you avoid tax problems from arising in the future. So if you are looking for tax relief services, know that you're not alone. Know that many Americans like you are also looking for ways to relieve their tax burdens. It's worth really spending some time to research what options are available to you, whether it's an IRS repayment plan, whether it's an offer in compromise, Fresh Start program, penalty abatement, or other type of tax relief. You can visit the IRS tax website to find information about your Fresh Start notices, penalties, and relief options. But you can also save a lot of time by just going to a reputable tax firm to help you find the best route. Some frequently asked questions. What is tax relief? Well, tax relief ideally represents a policy or a government initiative aimed to help businesses as well as individuals by decreasing taxes that they otherwise will have to pay. It can come in the form of a program or as some type of government support. There's and the most important ones include the tax credits. When all of the deductions from a taxable income are made, a tax credit will further reduce the number of remaining taxes. And of course, you have your tax deductions, which I help to explain on a weekly basis here. The first time penalty abatement, that's the most commonly available type of waiver allowed by IRS. If you have a good history of filing and paying taxes on time, and you do not have a record of penalty, you may be qualified for a first-time penalty abatement, where the IRS waives the penalty. Again, some of those criteria for that first-time penalty abatement: good history of filing, paying your taxes on time, and no record of penalties. Each day that you fail to pay your tax bill, there's a good amount of interest and fees that are added to your unpaid amount. This is why qualifying for IRS Fresh Start penalty relief is just incredibly helpful. What are some of the advantages of a tax relief company? Well, most Americans will agree that facing the IRS is an intimidating thought and would be the last thing they want to happen. Facing all these complicated regulations, the changes they place every year, keeping track of all that, and the tax jargon, it makes the process overwhelming for most people. Enlisting a relief service really does make the process a lot simpler, allows it to be understandable. The tax experts can help avoid tax liens and levies. The IRS uses seizure asset and wage garnishments to collect the majority of the taxes that are owed. Let me repeat those nasty names again: seizing your assets and then just taking money out of your wages. Wow. You can't avoid these if you're aware of all other options. Tax professionals understand the tax laws, explain the process. They can serve as a tax risk representative for you to negotiate with IRS on your behalf. And they can also help you avoid the blasted tax problems in the very first and keep them from arising in the future. So if you're looking for tax relief services, know that you're not alone, that many Americans like you are also looking for ways to relieve their tax burdens. It's really worth checking out the IRS repayment plans, which keep in mind that they do have the short-term payment plan and long-term payment plan, offering compromise arrangements, fresh start programs, penalty abatement. It's quite a few options that you have at the current time. So just a couple of FAQ, frequently asked questions. What is tax relief? I mentioned that is policy or a government initiative aimed to help businesses as well as individuals cut down their taxes they otherwise will have to pay. And there are all of these tax relief methods available. And keep in mind what's the definition of tax credits. Well, all of the deductions from a taxable income are made, tax credits will further reduce the number of remaining taxes. Keep all those things in mind, and we'll be glad to repeat that a bit of information over the course of the remaining tax programs. If you would like to call in and let us know if you would like things repeated and our extra effort made to explain them and giving some life time and realistic examples of their use in action. Okay, so the big beautiful bill that got passed last year, July 4th to be exact. There's not many folks who are still itemizing. It goes down every year. Of course, the number of 1040s that had a Schedule A attached, that plummeted for all the years after 2017. That's thanks in major part to the Tax Cuts and Job Act of 2017. That act set a $2,000, a $10,000 limitation on just how much you could write off on a Schedule A, for state and local taxes. And that act back in 2017 nearly doubled the standard deduction amount. So as a result, hence, folks using the standard deduction in far greater numbers than the itemized Schedule A. You need to stay up to date on the changes to the itemization in last July's One Big Beautiful Bill. Some currently impacting the 2025 tax returns that you're in the process of doing it at this time, and then some of them did not take effect until 2026 tax filing year. So, about half of them impacted this 2025 tax season, and another half will impact 2026's tax bill. So there's three key changes that I think, with your agreement, that need to be mentioned just about at every program throughout this filing season. The first one is the limitation on deducting state and local taxes if you itemize on your Schedule A. The first huge change, for 2025 a current tax year is that increase in what you can write off in the form of state and local taxes. And that's for the folks who have homes, obviously, who are paying mortgages and paying state and local taxes. And that's $40,000, folks. That was up from 2017. I should say for up since 2018. It actually is for post 2017 tax year. But beginning, back, beginning. First off, the limitation started at $10,000 that you could deduct in taxes, state and local taxes, but beginning in this year, 2025 tax filing year, that amount that you could deduct blossomed from $10,000 up to $40,000, and that's in vogue, and that's good for tax years 2025 through the end of 2029. So for tax years, it's $40,000. After it expires or goes back to $10,000 at the end of 2029. So it's good for 2025, 26, 27, 28, and 20. It's good for 5 years. The total amount of itemized deductions that you can deduct on your Schedule A, if it makes sense to even use the Schedule A. You best check your standard deduction, folks, first before going through all of that trouble, nitpicking through the Schedule A and looking to see if your state and local taxes plus your medical deductions plus your contributions to charity plus any possible 2% above the line business deductions, and even gambling losses, if all those things exceed what you can get on the standing deduction without having to go through all of that hassle. So just keep in mind that you do have that greatly expanded increase if you itemize and have all of those deductions, that you can go all the way up to $40,000. Enjoy all you can during these 5 years, because after 2029, the limitation drops back down to $10,000. That is, unless Congress, takes action to expand it, above $10,000. If you're married filing jointly, and you file a tax return, and that's certainly a legitimate area of concern, because there are a few people out there who may have once been married but are no longer married, and who are now living the life of single folks because of divorce. But if you are married and you had decided for whatever reason to file separately, keep in mind that there's phase out limitations. If you're married and still married and haven't finalized the divorce yet, and you filed, you have to file a separate tax return. If you're filing a separate tax return, the amount that you can deduct for state and local income taxes, it's $20,000 each. For beginning in 2025. There is a income limit, and I hesitate to go into those income limits, but just be aware of the fact that at those limitations, cannot go above certain income limitations, go above certain amounts because of the income that you have, and because it is so restrictive, and in some cases fairly complicated. I won't go into those limitations, but just be aware that if you're itemizing and you're deducting state and local taxes, just be aware of the fact that if you're married, and you have modified adjusted gross income of over 500,000, over $500,000, there's going to be a phase out of what you can actually deduct on your Schedule A. If you're a couple and you're married, but you're filing a separate return, then that phase out begins at $250,000. If you're married and filing a joint return, the phase out begins at $500,000, $500,000. So another big area in doing a itemized Schedule A, just keep in mind that charitable deductions do get a bit of a haircut, and that begins next year. I won't bother you with the actual amount, but just be aware of the fact that for 2026 returns, there is going to be a limitation to the amount that you can actually deduct for charitable contributions. Now, as far as charitable contributions, A lot of folks who do not itemize choose to take the standard deduction. They it doesn't happen this year, but next year for 2026, they'll get a nice tax break, even though they don't file a Schedule A, even though they do not itemize. And beginning with next year's tax return, just keep in mind that they can they'll be able to deduct up to $1,000 of charitable cash gifts without even having to itemize in the Schedule A. So, but keep in mind that doesn't really apply until next year's tax return. Beginning with 2026 tax return, they'll be able to deduct up to $1,000 of charitable gifts without having to itemize on the Schedule A. If they're married and filing jointly, they'll be able to take $2,000 on next year's tax return, 2026 tax return. So, are you a victim of a disaster that took place, last year in 2025? Well, it's good for you to know, because there's a good number of areas that did suffer a federally declared a disaster. Keep in mind that in order to deduct some of those losses on your 2025 tax return, keep in mind that there are rules for deducting personal losses when you have a disaster. It has to, number one, be declared as a presidential disaster. It has to be declared a federal disaster by the president. Your loss amount is actually equal to the smaller of the damaged goods adjusted basis or the decline in value. Again, what is going to be the loss that you're actually going to show? Well, it's going to be the smaller of these two things, either the smaller of the property's adjusted basis, damaged property's adjusted basis, or a decline in value. And then that has to be reduced by any insurance proceeds that you've already received or expect to receive in the future. So again, what is the loss amount that you're going to finally wind up with? It's equal to the smaller of these two things, the smaller of the damaged property's adjusted basis or the decline in value. So you have to figure both of those calculations and take the smaller of those two things, smaller of the damaged property's adjusted basis or the decline in value. And then from that figure, you have to deduct any insurance proceeds that you've actually received or expect to receive in the future. And IRS doesn't set a time on that in the future. If you expect to receive that in the future, you better go ahead and especially if it was given to you by an insurance company, you expect to receive that in the future. That's what IRS expects you to declare on your tax return. So if you are in that situation, how do you report the loss? Well, we won't go through all of the details of reporting the loss, because you're just going to have to get in and dig through the instructions, which in the forums and the explanations that you'll find. But here's how you would report that loss. You're going to report it on your 2025 Form 1040. First, you have to do what they call a Form 4684. 4684. You'll be quite familiar with it by the time you get through with it. But then after filling out the Form 4684, then if you decided to itemize as opposed to just taking the standard deduction, then if you are going to be itemized on the Schedule A, you have to transfer the amount to Schedule A, line 16, and then write net qualified disaster loss. Well, again, first off, if you're going to be itemizing on Schedule A, you transfer that loss to Schedule A, line 16, and then write net qualified disaster loss. Now, if you're not itemizing and just taking the standard deduction, follow the Form 4684 instructions for line 15. And I would certainly highly recommend either having your return done by a qualified professional, CPA, or a tax accountant. So keep in mind that the rules do differ for personal losses from a disaster that began after July 4th. So you might want to keep that in mind. A big beautiful bill did make it beneficial to get the reward that would lower the tax for lower income folks who put money into an IRA and also who put money into a 401k, 403b, a SEP, SEP, or a similar retirement plan. And keep in mind that for those who do have a 401k plan or employed with a retirement plan at their job, you do want to check what you had put in. And one of the major ways to save money, folks, is to find out if you have actually contributed to the 401k the maximum that you might, and the maximum that would allow you to get a greater write-off on your taxes. And they keep in mind that this past year, the 401k catch-up contributions, you can go all the way up if you have 401k and contribute all the way up tax-free to $23,500. So if you haven't contributed that amount through your 401k, please check out the possibilities of increasing that. And you have, fortunately, until the end of this 2025 tax filing season to make those contributions to your 401k. Because you can do that all the way up to the end of the tax season, which is April 15th, remains April 15th, of this year. So there are additional savings for folks, to benefit from putting your money also into to an IRA, in addition to the 401k type plans. And there's credits that are available for folks who do take advantage of increasing and starting an IRA, who haven't really had an IRA retirement plan in the past. Please check those out with your local tax preparers. And this might be a good time also just to mention that for those of you who do have questions, please send in your questions by phone by calling Everett James at 951-522-9877. That's 951-522-9877. And my email is evjtax1@gmail.com. evjtax1@gmail.com. Also, might be a good time to remind you of our ongoing support for this very, very deserving 9 and 10-year-old baseball team that has been in existence since 2023 and is in dear need of financial help to not only buy in-kind projects, items, such as team cleats, helmets, jerseys, batting gloves. It would also be great if they could get a team matching equipment bags. In addition to some uniforms, matching, uniforms for the team. But it's easy to, it's really easy to make a contribution, and oh, so quick, by just simply calling Jason and Cicely, or Cicely and Jason Wooten, spelled Wooten. Their phone number is 951-534-3838. 951-534-3838. And for those who make a contribution, this broadcaster and tax accountant is now offering a free computation of your tax return for 2025 for those who offer a substantial contribution in kind or in cash to this particular baseball team. They could certainly get help with their lodging expenses that they inevitably will face if they go out of state to play in a tournament in one of the neighboring states. So, folks, get in touch with us. We're looking for your calls, and we'll be able to not only answer your questions at the very next program that we have, but we'll try to answer any questions that you put forth and do it in a very prompt manner by responding at the very next week's tax reporting session. Okay. The important thing is, if you are locked in the process of doing your 2025 tax return, if you do happen to be planning to use the well-known educational credit, which is the American Opportunity Tax Credit, it's worth up to $2,500 per student for each of the first 4 years of college. But folks, please do not try to claim this credit for more than 4 years. IRS will truly be after you if you try to do that. But they do have safeguard questions on the form that has to be filled out. But just keep in mind that up to $1,000 is refundable. At one time, when they first came out with this credit, I remember a larger amount is falling in the category of being refundable. Now it's only up to $1,000 refundable. That's still $1,000. The American Opportunity Tax Credit, the AOTC, is based on 100% of the first $2,000 spent on qualifying college expenses and 25% of the next $2,000. It actually starts to phase out when you have modified adjusted income. And if you're a modified adjusted income for couples, married filing joint is $160,000. If you're single or head of household, it's $80,000. So $80,000 for singles and head as the household is is the amount that where the benefit phases out. Just keep in mind that for couples it's $160,000, and for singles and heads of household, that amount phase out amount is $80,000. What are some of the expenses that you can deduct? The tuition expenses, for example, can be deducted. Books and fees for at least half-time students. So the minimum percentage there, you have to be going to school at least on a half-time basis. If you're also using the tax-free 529 funds to help pay for colleges, you can try to coordinate the 529 educational tax break and the AOTC, the American Opportunity Tax Rate, but use a tax preparer to do that, because coordinating those two breaks, the 529 educational plan and the American Opportunity Tax Credit, that can be pretty tricky. And keep in mind now, you cannot use the same college expenses for both of these tax benefits. You can only use them for one. Starting in 2026, the filers must have a Social Security number, and the college student also has to have a valid Social Security number for the filers and the college student who's actually going to school. Okay, folks, with the remaining moments, I just want to remind you that the nonprofit organizations, 501(c), I remember from years back that those expenses and the deductions that have been claimed, the American government has such a huge heart, and never often were even afraid to mention the possibility of revoking that exemption status for, if you're a tax exempt organization. Well, look what the big heart of the American public, the American taxpayer, and the religious objectives that have been met by the American government. Look what it has led to. All of these out of order fraud that has been taking place, and of all people, by people who are not even legitimate citizens of the United States, not even citizens, and they and are new to the country. So here, you've heard about the Minnesota huge tax fraud situation, but that has even reached into the tax court. They are okaying and they're backing up revocation of nonprofit 501(c)(3) exemptions. In one case, the group was created in 2001 to distribute powdered milk to children in third world countries, and those organizations got the exemption. IRS audited the organization in 2020, revoked this exemption after finding out that it operated a cafe for profit, believe it or not, and rented the space in a building that it owns to tenants, getting a profit. But they, all that time, did not engage in one charitable activity. The tax court, upheld IRS's determination saying the group did not exclusively operate for charitable purposes. So, I'm sure that is just at the tip of the iceberg. The folks, keep in mind it might be a good idea at this point to get an IRS online individual account. It can make your tax dealings with IRS a whole lot simpler. What are some of the features, some of the things that you can do with an online account? You can pay your estimated taxes with it. You can access your tax transcripts and access your records. You can view digital notices from IRS. Check the status of your tax refund. Who wants to know the status of your tax refund? Or you can even file an amended return. You can make tax remittances. You can apply for a payment plan if you owe IRS back taxes and more. You can create your own account. All you have to do, and I shouldn't say all you have to do because you will, I can guarantee you folks that once you have this ID account, you will have earned it. That's one of the few things that this promoter and this broadcaster has actually done. And I can tell you that you will have gone through as many over as many barriers that you'll ever know about just to get that what they call ID.me account. It is spelled ID, capital letters, ID, and then dot small letters ME. So it's worth the effort. So they can verify your identity, and with all of the fraud and crime, you're gonna have to. There's gonna be more and more percentages of the people who are going to demand to have and insist on having an account for protection of their own tax business. And you either have to submit a photo of your government ID or a selfie, or participate in a live chat video with an ID.me representative. So, folks, to finish off this hour, our president is now, fortunately, suing the Treasury Department and IRS for $10 billion in damages in his capacity as a private citizen, not as a citizen. The controversial case arises from unauthorized leaks of tax records relating to Trump and other high-profile figures by Charles Littlejohn, who's an employee with management consulting firm Booz Allen. They had a contract with IRS, and Mr. Littlejohn made unauthorized disclosures of the information to the New York Times and the ProPublica. He has since pled guilty and is now serving time in federal prison. Well, that will do it for us for this week's program. Looking forward to your questions, comments, and next week's session.
Right. Okay, Eric. Yeah, I heard your last statement here about the president suing the United States government. When has that ever happened? It is that is a shame. It's a shame. So much for waste, fraud, and abuse. Okay, appreciate that. But anyway, guys, come back tonight on Cultural Excellence. Yours truly I'll be here spinning the tunes. Kick back, grab a glass, and enjoy. And if you love this program, hey, check out Ev each and every Thursday, 10 a.m. on the West Coast, 1 p.m. on the East. And in the meantime, Ev, enjoy your day, my friend.
Hey, thanks a lot. We'll see you next Wednesday, not Thursday.
All right.